Anil Magnani is now joining us on the phone line. Anil, what do you make of the move that came in the last couple of days? Do you think shorts were trapped again? Again, it is telling you that it's just a buy on dip market?
I would have to say so. I think, in a bull market, my view is that every level gets respected. So for the longest time, the market was holding the 10-week average and bouncing back off that. Once we broke the 10-week average on the surgical strike day, then we tried to bounce, but it failed, but actually took support at 8506, 8510 at that time was a 20-week average. So I think each average will be respected in a bull market. But I think the key now for the market is it needs to sort of take out some certain levels. I'll get to that, but the point is you don't want it a case of making a lower bottom and a lower top every time. So having made a high of 8968, when it bounced off 8555, it made a lower top at 8806. Now having made a new low at 8506, it should ideally go and take out the previous the top of, let's say, 8807. Then you can, safely assume that you're out of the woods. Even before that, I will give a couple of important levels to watch out for. I like to watch the 0.5% retracement in any rally because that's the key. If it really wants to show strength, it should take out the 0.5 first. So that's at about 8735. And then if you connect all these tops, these lower tops that I've been talking about, so if you take the 8968, subsequently you had 8893 and then 8807, if you join those tops, that trend line comes at about 8760, give or take, here or there, a few points. So you'd like to see the market take out 8732 to 8760 first. That will be the first, at least, you've broken out of that trend line. And then obviously 8807, the most recent top, because then you can safely assume that the recent shortest term pattern of lower tops, lower bottoms is being negated. So there is a good thing that we bounced from 8506, but there are some sort of headwinds here that the market needs to cross over to sort of completely convince at least the technical guys, that you're out of the woods. Because I'll be very honest with you, this is one of the most confusing periods I have seen in a long time, in the sense that net, no market in the world is going anywhere. So you'll have your 2 days up on the Dow, then 2 days down. The same thing the Hang Seng does, 1 day up, 1 down. India was doing that a little bit in between, and you have even your European markets which do that. Now, why I say it's very interesting or confusing for an analyst is the MACD on the weekly is in a sell in the DAX, in the Dow, in the S&P, in the Hang Seng, and in India. Now, I'm trying to take the major markets from each zone. So the S&P, the DAX, the Hang Seng, and for us, India. All four are in a weekly sell. But neither are they falling, neither are they going up. 1 day up, 1 day down. So net, you come to around the same place you were. So that's very interesting and something I haven't seen in a long time. Is it the euphoria or the fear of an election in the U.S.? Is it, because of the global sort of uncertainty with Russia and China and India, Pakistan, in Syria and U.S., whatever, I don't know. Or is it the Fed, the ECB? I'm not sure. I don't want to get into fundamentals, but from a technical point of view, it's a very interesting time. I've never seen something like this where so many markets are in a sell, but neither are they falling and neither are they going up. So I don't know what to make of it, but I'm just pointing it out to people who look at charts, who are interested. That's something that is unique I've seen after a long time.
As far as ICICI Bank is concerned, is the chart looking interesting?
I mean, if you'd asked me 3 days back before the news, I would say that it's looking weak because the way the stock was falling off from the highs of 280 something all the way to 240 or 238. We can argue it took support at the 200-day, but I think now back to the the recent high. So the recent high was about 283.75, or give or take, will be the first test for it. If it were able to take out the 2-month or 3-month high, I think it made in August or so, then probably your first, the 0.5 of the entire move. So if you take 393 high and the 180 odd low, the 0.5 comes at about 287-ish or so. So a little more than the 283 I spoke about. But like I said, 0.5 is a very, very crucial number, at least the way I look at charts. So 287 becomes a very key number now. If it can take that out, then I think it can continue its rally to 310. But because it's so close to the 50% retracement, I will watch a little bit at 287 to see what it does.
As far as some of the other large cap banks are concerned, so ICICI, SBI, Axis, SBI, anything of that looking interesting? Because on a fundamental basis, you would start to look at relative valuations for these banks quite soon.
See, Axis was the one that fell the most and the weakest of the lot, but it came and taken support at the 50-week, which is around the 515. It did 513. So I'd like to believe that maybe at least for the shorter term, the worst is over. But having said that, after a pullback, I would at least expect it to go and retest those levels. So I think between 550, 560 is where Axis should pull back or can pull back in this move. But from there, I would at least expect once more to go back and test those 520, 515 levels, probably make a bottom and then take a call. So for now, okay to see it pull back because of the averages, but I'd like to see a retest. The one that was bothering me, not in the banking, but because it's a heavyweight, is HDFC. I think that interestingly fell quite sharply from the highs of 1464 all the way to 1297. I believe there's an unfinished target at about 1280. So I think after this pullback, I'd like to see HDFC once again come back down. So in this pullback, the level again, the 0.5 level, if I take, is about 1380. So I'll be surprised if it took out 1380 in this move. I'd probably like to see it come back, do a proper move up to 1180, which is the 200-day or the 50-week average, and then sort of bottom out. So HDFC, not the bank, the big one, is the one I'm not yet convinced that the downside is over. I may be wrong, but my gut feeling tells me that I'd like to see a proper move back before I can safely say that it's out of the woods.
Right. How would you look at Adani Ports? Again, that's a name which has done very well of late.
I think it's another one that is went sideways, like an ICICI Bank. After August, it hasn't done anything. It's pretty much just gone sideways. So it's come back. Excuse me. I'd like to see what it does around the August highs, which is right now at about 280. The level actually, if I again did the recent high of 374 last year in August, and then the collapse all the way up to 169. That point, in this case not 0.5, 0.618 comes at about 296. So maybe that can stretch to about 296 in this move.
Right. If we just look at some of the other names in the large cap space, probably something like a Z. Now, that's creating a different sort of a pattern. Every time at the start of the results season, it tends to do well. But this time around, it's fallen quite a bit ahead of results. Would you be worried about a changing pattern over there?
See, I mean, I'll be one thing very honest. Since April, this is the first time that Z has broken straight through below the 50-day. It has never done that before. But having said that, 501, and it did about 497, so not too far off the level, is the 20-week average. Having held the 20-week, I'd expect it to bounce, but now this is the first time where the daily and weekly charts are in a sell, although the monthly still remains in a very decent, strong buy. So I'd expect it to at least pull back. If it has to suggest weakness, then make a lower top first. So because it's held the 20-week, I'll give it enough chance to pull back. In the pullback, I think the key level to watch out again in the pullback will be 543, which is the 0.5, and 554, which is the 0.618. If it were to stop somewhere in between there and start to pull back down, then you can safely assume that Z has made a lower top, and this time the correction is going to be a little steeper, where it could even fall back to 475. But again, that's still very, very early days, although the monthly bar, I mean, we still got 10 days to go, but the monthly bar is not very encouraging this time around, and the volumes also are pretty decent on the way down. So there is early signs that we could be in for a deeper correction without changing the overall bullish trend. But again, I think first the pullback, make a lower top, then properly correct to 475, 460 range would be something if I had to picture how Z would play out.
Right. Any view on Vedanta Limited? Now, Hindustan Zinc declared numbers. That stock has not gone up, but Vedanta has reacted to that. It's about 50% of its profit, 3.5% higher.
This is a very interesting one because, I mean, at $60, obviously it looked a very, very good, beaten down buy and at many support levels. I mean, at that time in my wildest dreams, I would not expect a price of 200. I mean, 3x on a large caps name. But having said that, it's coming to some key levels now. I think 213 to about 220 range is major resistance area for Z. I mean, for Vedanta. I'm not saying it cannot take it out, but the longer term chart still suggests that by then it would have done way too much, So I think somewhere between 213 and 220, I would definitely book out and then wait for a decent correction to re-enter. So it's been one of the beautiful stocks of this year, but I think now we are reaching some major oversold territory between 213 and 220.
Right. Just a word on Jubilant FoodWorks as well. After days, it has given a 8-10% move in the last 2 days.
But this stock tends to do that in whenever it moves. I don't know if it's result relevant or, but any time I've seen the stock, it does that kind of move and then doesn't really sustain. And if you look at the bigger picture in this stock, it's still one of the names that is nowhere done what the market has done. So I think it's a little early to jump the gun on Jubilant. I will probably wait for some more time to see if there's some follow-up or if the chart really changes. But for now, with the 50-day below the 200-day, the 50-week below the 200-week, all just points back to a trading pullback. I think a lot of work still to be done. The levels to watch out, since you said it's up, I don't know what the price is today, but I think somewhere between 1170 and 1210 is the major problem area for the stock.
Anil, thank you so much for taking out time for us. Always a pleasure.